Everybody, welcome to the show today. I'm very pleased to have with me Jilliene Helman, who is the founder of Realty Mogul, who I'm sure pretty much everybody listening to the show has heard of before. I'm going to apologize in advance for the puppy sounds you may hear in the background. Hopefully they'll be edited out, but maybe not. We'll find out when we hear this track later on. But in any event, Jilliene, welcome to the show.
Thanks, Jonathan. It's nice to be on.
I'm sorry about the puppy noise, but so what I would love to hear from you to start off with is, just your extremely brief 30-second introduction of who you are and what it is that you do.
Sure. So I'm the CEO and founder of Realty Mogul, and we're an online platform for real estate investing. So we connect investors who are interested in diversifying their portfolios into real estate with real estate opportunities, both individual assets and funds, all over the country for folks to get invested in and start to build out their real estate portfolios.
And Realty Mogul really was, if not the first, really one of the first crowdfunding platforms that did equity. Is that right?
Yeah, so we launched as an equity platform. Formally started the company in 2012. We actually did our first transaction in 2013. But yeah, we were one of the first companies on the scene.
Yeah, I remember when I first got started in this business, it was 2011, and crowdfunding was just kind of starting to be a thing. And I remember going to an event here in New York City about crowdfunding and talking to one of the founders who was there about whether they were doing equity or only debt. And I remember him saying, "We're only doing debt, and we don't anticipate anybody ever doing equity crowdfunding ever." And so I basically stopped looking into it, for a while after that point. But I would love to hear, and I know this is going back quite a ways, kind of that early evolution of the business, how it, crowdfunding in general, how it got to go from, purely just lending, debt on fix and flips, which it seemed to be at the time, to really doing like filling out the whole, capital stack with equity and debt.
Yeah, I think even before that, the impetus for crowdfunding was the Jobs Act, which passed in 2012 and really legalized the concept of crowdfunding and legalized the concept of, in marketing on the internet, right? Which is kind of the big innovation that came out of the regulation. I think in the beginning, most people probably didn't assume that it would apply to real estate, right? It was originally went through government in order to help small businesses. So help small businesses to raise capital, allow you to invest in, your local coffee shop, your local ice cream store, that kind of business. And then you saw startups also start to get funded through it. And when I saw the legislation, there was nothing prohibiting you from making real estate investments. And the real reason that I thought that real estate would be really interesting, in addition to having, deep passion in it personally, was that you could get cash out of the system. So one of our core tenets when we started the company was that we wanted only cash flowing properties, and we did debt too. We did debt and equity when we started. We actually ended up shutting down our debt business. We can talk about that and sort of why we did that. But we did debt and equity, but everything that we did had some kind of cash flow element. So it wasn't until, many, many, many years later that we started working on opportunistic transactions and also ground up development transactions that didn't have cash flow. But part of the reason behind that was it was just a less risky asset, right? If you have a less risky property, if you have a property that's cash flowing, you're not taking development risk, you're maybe not taking, renovation risk. So that was one piece of it, was try and stay, a little bit lower on the risk reward curve. And then the other piece of it was thinking about how do we build virality, right? In the very early days of the business, no one knew who we were. There was still a lot of fear to invest online, and how do you sort of garner trust and credibility on the internet? And so if we could get cash out of the system by way of monthly distributions coming off of those properties or coming off of those loans, depending if it was debt or equity, we thought that that would be a really, really great way to build, credibility and build some word of mouth as well across investors.
So I've heard, there's a lot here that I want to ask you about, but one of the questions just came to mind was, I've talked with other founders in other areas about essentially sort of network businesses like Realty Mogul is in a way. And they talk about the cold start problem, right? Like if you're trying to be a bridge between essentially buyers and sellers, and you've got to have both buyers and sellers on the platform for the other one to want to be there,
Yeah.
right? If there's no sellers, no buyers want to be there. If there's no buyers, no sellers want to be there. So how did you How did you solve the cold start problem?
Yeah, my answer is there's no solve. Like you just work the problem every single day. I mean, it started with trying to get as many investors or members on the platform as possible. And then it started with small deals, right? I mean, the first deal that we ever did was $110,000 for a
Mm.
duplex. So that was a very, very small, chunk of capital that was being invested in that project. The largest equity deal that we've worked on was 17 million of equity that came through, the platform, 100% of that capital coming from, digital investments online through our technology. So you look at that and you juxtapose $110,000 sort of in the beginning to, 17 million in a larger transaction for us. And it's just one step at a time. It's being really upfront and cognizant with real estate companies and operators in the beginning of this is unproven, right? This is unproven, but if you want to be on the forefront and you want to be, a company that is very innovative alongside us, we'd welcome the opportunity to work with you. And then on the investor side, what I actually did, and this is, over 10 years ago now, but I did pretty much every angel investor pitch event that I could do. And it was less about, raising capital in the corporate entity and more about building the brand and building brand awareness across accredited investors, right? Folks that are in sort of those angel network rooms or accredited investors. And so it was trying to actually convert them from venture investors to, real estate investors and making them aware that this digital marketplace existed. So that was part of how we did it. We also treated every single member that signed up like gold. In the early days, they would get a phone call from me. Right. Welcome to the platform. We want, there's real people here. If you need any help, here's our cell phone numbers. Feel free to call us. So we really had a really high touch approach, which is hard to do at scale. But in the early days, you can do a lot of things that don't scale to try and get that momentum running and try and get that flywheel working.
To get the traction. Were you doing any kind of advertising as well at the time, or was it really all just sort of word of mouth, pound the pavement?
We had no money, right? So, I mean, subsequently we raised a lot of venture money and we did a lot of marketing and we continue to do a lot of marketing today now that, we have the capital to be able to do that and invest in the business. But in the early days, we didn't have that luxury. It was all very grassroots, trying to just kick and scream and claw your way to trying to build that momentum.
And so in terms of like where the idea for this came from, were you already involved in real estate when you started Realty Mogul, or was this just like that you had a good idea, like from a tech background? Where did it come from?
Yeah, so I had a lot of exposure to real estate through my family. So my mother was in luxury residential. My father owned industrial and office property for his businesses. My grandfather built a building developed a building in Los Angeles. So I sort of grew up around real estate as a child. I was working in banking actually. So I went out of business school at Georgetown, and then I went to work for a bank, which is a large Japanese bank. And so I was exposed to real estate through that experience. I was working at the wealth management arm of that bank, sort of the private banking arm. So had a lot of exposure to real estate investors, was working with the trust and estates team, was working with our real estate lenders, but I wouldn't say that I was, directly in real estate. And really the catalyst for the company came from the Jobs Act. So it was this, political change that changed the only change to the Securities Act of 1933, 1934. For decades, there had been no changes to that. And so the Jobs Act was pretty material. And so when that came out, I took a look at it and I said, wow, there's a huge opportunity here for real estate. And again, I don't think that's how most people were interpreting the Jobs Act, right? It was really intended more for startups and small businesses originally.
So do you want to, just for the benefit of the people listening, explain how that made it possible for you to start the Realty Mogul?
Yeah, so there were a handful of things within the Jobs Act, but I'd say the one that we rely on most is the addition of the 506C exemption. So most real estate private placements historically were offered through 506B. And what that meant was that you could only bring in money from investors that you had a prior pre-existing relationship with, that you could actually prove, if asked by the regulators, that you had a prior pre-existing relationship with. So you couldn't advertise on the internet, right? You couldn't put up Google ads or Facebook ads, marketing investments and drive people to invest in those investments. It was sort of this, old boys club, very closed end network. You had to know a guy, right? And so one of the clauses of the Jobs Act created this new exemption called 506C, which said you can now broadly market investments, private investments, which most real estate, investments like the type that we work on are private placements. So you can broadly market those across Google, Facebook, you can go on CNN, however you want. But there's a new limitation, and that new limitation is that you have to verify that that investor is actually an accredited investor. So you can either get, sign off from their CPA or their attorney. You can get copies of their tax returns. You can get copies of their bank statements. There's a couple of different ways that you can verify, but that was really the game changer, right? Was this ability to say, okay, we can build a brand and be, good at digital advertising to make investors aware of these investments, where historically that was actually illegal.
And so in terms of like the way that your deals are structured, are you actually then the issuer of the security? Like you're actually, rather than being a broker, because to be a broker between the investors and the operator, you have to be a broker dealer. Are you a broker dealer, or are you actually raising your own funds and then turning around and investing them into the deals?
Yeah, so we have a handful of businesses. Realty Mogul has evolved quite a bit over the last 12 years. So we have both an issuer business and a technology services business and a broker dealer. So depending on the transaction is sort of where we'll sit and sort of the roles and responsibilities that we'll play, and frankly the role that we'll play. There's been a lot of transactions where we're the issuer, we're making major decisions in the transaction. We have the right to sell the asset. We have the right to, determine if we're going to replace the property manager, things like that. There's other types of transactions where the investor is investing from a legal perspective directly with that real estate company. And we're providing ongoing services. So ongoing asset management, ongoing technology services, but we don't have control in the underlying real estate. So we've got both. We think that there's a place, time and a place for both. A lot of times very large sponsors. So if we're working with a $1 or $2 or $3 billion sponsor that wants to raise equity for their transaction, they don't want to give up controls, right? So they don't want a Realty Mogul or another, firm to have controls. And so what we said is we have to build a piping, if you will, to accommodate that sponsor, because we want to be able to provide that product to our underlying investor. And so, we have the ability to structure in a couple of different ways.
So this is actually new to me. I didn't realize that you guys are actually involved in asset management and sort of more intimate parts of the property operation. Just tell me a little bit more about that. Are these deals that you're sourcing yourself, or do you have partners that you work with who source the deals and then bring you in as to perform asset management?
Yeah, so we have both. We have a co-GP business where, partner brings us a transaction. They don't have the capital to close on the transaction. And we'll say, okay, we'll bring in the capital, but in order to bring in the capital, we're going to do, asset management and take major decisions, right? We also have a business where we can acquire assets directly. So, we've got two REITs, two real estate investment trusts. On behalf of those two real estate investment trusts, we've acquired a number of assets through one of our other affiliates. So we've got a lot of flexibility sort of up and down the chain in real estate. We didn't start there, right? I mean, this is 12 years of evolution of building businesses and sort of stacking opportunities on top of opportunities. Originally, the business was strictly, working with third-party real estate companies. But we've evolved over time to be able to fit, a variety of different niches. We want to be positioned such that if there's a good real estate deal that we're interested in doing, we can find a way, to operate within that real estate transaction.
And what are the kinds of things that you target? I mean, I assume it's at this point not just multifamily, or
No.
is it? Yeah, kind of give me a sense of the types of deals that you guys are involved with now.
Yeah, so it really runs the gamut. I mean, there's 280,000 members on Realty Mogul today. So that gives you some sense of sort of the scale of the membership base. And the reality is each one of those members is a unique individual, right? And they have unique financial goals and unique interests, and they have unique biases. And so they're looking for different things. And so we try and find a variety of product to suit those 280,000 members, right? For some investors, it's not going to be the right investment. I'll give you an example. If we do a, high octane ground up development deal, that's a very, very risky transaction. That's not going to be a good fit for a retiree, right? But if we do a core deal with cash flow, that may not be a fit for someone who's trying to take a lot of risk, maybe, a little bit younger in their career and really wants, sort of double digit potential on an equity multiple, right? And so there definitely is this concept of sort of barbell, but we've also done a tremendous amount of value add. So I'd say over the 12-year history of Realty Mogul, if you were to bucket it into, core value add and sort of opportunistic, value add would have been the bulk of the portfolio. About 65% of the portfolio is multifamily, and then the remainder is all different asset classes. So, office, industrial, retail, self-storage. We've done very, very little hospitality. We have not actually done a hotel deal since 2015. So it's been almost 10 years since we've done a hotel deal, which, in hindsight was probably a good decision coming through COVID. But other than that, we've worked on every other asset class.
And so here's another question. I frequently have people who are just getting into the business, who want to be sponsors, come to me and say something to the effect of, "Oh yeah, so I'm going to go find a deal, and then I'm going to go put it on Realty Mogul and raise money that way." And I try to tell them that's not exactly how it works.
Yeah.
But tell me how it works, though, for people who are listening and maybe want to disabuse them of the notion, or just, for people who maybe are more qualified to explain how they would actually get on the platform. I know it's not easy to get listed on Realty Mogul. So what are the types of ways that you're qualifying deals and sponsors to get onto your platform?
Yeah, so it's a bit catch-22 for real estate sponsors, right? And a lot of them also have sort of this cold start problem that you asked about earlier. But we only work with sponsors that have a track record, right? So it's usually a couple $100 million in assets under management. We've worked with other sponsors that have $1 billion, $2 billion, $3 billion, $4 billion of assets under management. So they tend to be, pretty well-established sponsors. We ask for copies of their org chart. They're real companies, right? They're real companies. This is not a hobby, right? If your LinkedIn profile doesn't say that you're the CEO of that company, like, for sure, that's a no, as just a minor example. But we do have a co-GP program. So, for sponsors that have at least $100 million of assets under management, we have a co-GP program. Really, we'll take control of that transaction. So we'll have the controls, we'll have, the ability to make major decisions, but, they can market it on their track record that they were a co-GP on that transaction if they, bring us the deal. So that's kind of an interesting business line that we went into to solve, this interesting challenge of how do you find the best assets out there? And a lot of times, it's the folks who are just the scrappiest who are willing to, call on owners year after year after year, month after month after month, and they unleash and unlock some really, really interesting real estate, right? And so that's a good way for us to get access to kind of that real estate. But, typically we're looking for well-established sponsors, built out organizational charts, a track record and a history of working, in that asset class, in that market. Is something else that we're looking at. We run background checks, we run criminal checks, we run reference checks, and we meet with them, we go tour the properties, in almost all instances. So we do a pretty deep level of diligence there.
Yeah. So people aren't going to be able to come to you with their first deal, no matter how smoking a deal it is, without having a bit more depth on their team than just them. And when I say a bit more depth, I mean, probably need to partner with somebody who has a lot of experience before they can, even really have a meaningful conversation with you.
Yeah, I mean, we might buy the contract off of them, right? So if they really have, a truly, truly incredible deal, we'd be happy to share an acquisition fee or buy the contract off of them or otherwise compensate them, almost like a buyer's broker, right? I mean, typically, in commercial real estate, you're not using buyer's brokers, but if there's just a deal that's fantastic, that's under contract, we're happy to compensate people when they add value. So, but we wouldn't give that sponsor the ability to run the day-to-day or, make major decisions if the capital's coming through our channels.
Right. And, looking back on when you started Realty Mogul, how has it evolved as compared to where you thought it was going to go? Like how similar and different is it from where you thought you would be, 10 years down the road?
Yeah, it's not that dissimilar. I mean, people have asked me a lot, like, well, haven't you pivoted a ton? And it's like, we really haven't. Our concept from the beginning has been, building a digital platform for investors to get access to real estate, right? That concept has not changed at all. I think we've pivoted a little bit in sort of where we play. We were also active in the residential fix and flip business. We were originating loans and we had a lending company, in that business. We shut that business down in 2015. I mentioned we stopped doing hospitality deals in 2015. So, we've made some shifts and some pivots, when the markets got really hot in 2021 and it was cheaper to, develop a property new than it was to acquire a 90s asset. We said, okay, let's open up and start, allowing development assets on the platform. So we've shifted insofar as types of real estate, asset class within real estate, strategies within real estate, but the core concept really has not changed much at all.
And what about the profile of people who invest with you? I mean, because you were talking before when you first started out, you were just trying to get in front of accredited investors who were mostly tech investors, right? And it seems to me that now there's a whole a huge world of people who were never tech investors in the first place who are now, real estate investors.
Yeah.
How has your user profile evolved over the years?
Yeah, look, I think that we're through the early adopter phase, right? Maybe a lot of those tech investors were sort of the early adopters of the platform. They were comfortable with technology. I think COVID changed that quite a bit, where people, who maybe historically weren't comfortable with online banking or comfortable with online banking, comfortable with doing transactions online, and our average investment on the platform is close to $50,000, per ticket. That's a big ticket to do online if you're not comfortable with online transactions, right? And so I think that shifted quite a bit in COVID, where those people just gained a bigger degree of comfort, and we've seen that. But so I think it's broader. I think we're through the early adopter portion of the business, but you still have a lot of tech savvy people. Right. We also have real estate people, real estate brokers who may know a specific deal or really like a specific market. They'll comment on invest. Broadly, I'd say there's a lot of entrepreneurs who are using the technology platform to invest. So, they're do-it-yourselfers, right? Maybe they don't believe in having financial advisors make decisions in their, private portfolio, and they want to sort of do that themselves. So I'd say we do skew to, folks who are quite entrepreneurial as well.
And I had a question for you that now I just completely slipped my mind. Let me see if I can get it back. In terms of your users. Yeah, I'll just have to come back to it. I'm sorry. I'm sure it'll come back when we're in the middle of having a different conversation. So where do you kind of see this going? I mean, you kind of matured as a company. You've been doing this for quite a while now. You've kind of diversified the things that you're investing in. Where do you see it going from here?
Yeah, I wish I had a flashier answer, but honestly, I think it's continuing to do what we've been doing. The markets are different today. I personally think 24 and 25 are going to be really interesting vintages in real estate, right? We're starting to see distress play out in the market. We're starting to see, folks who had deals capitalized with floating rate debt that can't get debt extensions or have to do massive cash and refis. And so they have to exit. And we're working on a deal right now, that looks like that. So we'd be the buyer for a, distressed seller, really buying it where the debt is, right? So their equity at that point is wiped out. So I think that 24 and 25 is going to have some really interesting vintage and some really interesting opportunities. And so it's really just staying true to our core, right? Like we're continuing down the path. We want to find really interesting investments for investors. We want to pivot our strategy and be, nimble and willing to change as the markets evolve, which I think is really, really critical.
So I do now remember the question I had for you.
Sure.
So speaking about COVID, I mean, how did COVID affect your business? I mean, you talked a little bit about people becoming more likely to adopt, like online tech for doing investments because they were all doing everything online. But aside from that, like how did it impact, like from the investment side of things, how did it impact your business?
Yeah, I mean, look, what was it, Q2 of 2020? So COVID was kind of March 2020 when everyone found out. I mean, Q2 of 2020 was probably the slowest we'd ever been in 10 years, right? I mean, the whole world just felt like everybody pushed pause, right? Everybody pushed pause. No one was making investments. No one was buying assets. I mean, like there was nothing to do. I remember we did make an investment. This is going to sound insane, but we made an investment in a office property in Las Vegas, right off of the Las Vegas Strip. Literally, I think it closed like April or May of 2020, and people thought that we were, completely nuts. That property is now sold and, did well. And that's just a minor example. It's not, indicative of anything in particular, but there was almost no business that went on, right? And so that was a huge pause. And then after that, it was this giant surge, right? And the rest of 2020 was very, very, a lot of activity. 2021 was our biggest activity year, ever since inception of the company. So it really came roaring back. But I think a lot of that was just kind of this pent up demand from, kind of those 2 or 3 quarters in 2020. But yeah, I mean, for sure, we lost at least a quarter, 100 days. It was just silent. People were twiddling their thumbs. There was nothing to do. There weren't investors, interested. There weren't real estate companies interested. I mean, nothing was transacting. Just the whole world felt like it came to a standstill.
Yeah, but then I mean, it came roaring back and then some
Right.
after that, and certainly the
21.
kinds of deals that were happening were, well, I mean, different in the sense that you started having different kinds of debt on deals. I mean, you mentioned floating rate debt and a lot of bridge debt and stuff. Did you guys um, sort of like, what was your, I guess, attitude towards that change? Like, were you comfortable with the way that people were structuring the debt on deals? Did you like, I don't know, just would love to get your perspective on if you can kind of cast your mind back to sort of 21, 22.
I mean, look, hindsight's 2020, but there was all kinds of crazy things happening, right? I mean, I remember when you have to go hard on a 1970s or 1980s vintage asset before you've been able to do any due diligence, like that tells you all that you need to know about the market, right? That is gone. Like today, that just doesn't exist, maybe save for, one market in the country. I mean, when that started happening in Midwestern markets, that there's froth, right? You know that you're near the top of the market or that something's got to give. So, I think that a lot of people acquired assets assuming that the world was going to continue to, expand, right? And that there wasn't going to be a contraction. And, ultimately there was a contraction, which is, largely driven by interest rates. I mean, if you look at the economy today, everything we're hearing is that the economy is still strong. We've had back-to-back quarters of 3% economic growth. The job market has been stronger than anticipated. And so, that economy is strong, but I think interest rates have really adversely impacted real estate for sure.
Yeah. I mean, have you guys seen this playing out in some of the deals that you guys are involved with on your platform? Or have you?
Yeah, we're seeing it on both sides, right? We're seeing it as both a buyer and, a seller, if you will. Look, deals with floating rate debt are challenged right now, right? Where historically you'd see, cash out refis, today it's all about cash in refis, right? And if the, sponsor can't get the capital to do that cash in refi, their other option is to sell the asset, right? I don't see deals where the lender is going to take a hit, right? I really haven't seen anything, look, there's some in office certainly, but we're not as heavy in the office environment. There's definitely some in hospitality, but we have, very little hospitality. But I see on both the buying side and on the selling side, there are, transactions that were bought at the height of the market. The intention was to go do, renovations, and either those renovations didn't get done fast enough, or, the pricing was just so upside down that, those are the buying opportunities that we're looking at today.
Yeah. And so, so you mentioned a moment ago about sort of 2024, 2025 being an interesting time. How do you see this? What are you seeing now, and how do you see this unfolding over the next, 12 to 24 months?
Yeah, so the reason that I think 24 and 25 are particularly interesting is because you had a tremendous amount of floating rate debt that was originated in 21 and 22, right? So most of that floating rate debt has a 3-year duration plus, 2 1-year extensions. The reality of what we're seeing is that a lot of these sponsors aren't qualifying for their extensions because they're not meeting, either the debt yield test or the DSCR covenant test, or, whatever it may be. So that means that if there's no extension opportunities, that debt is up now, right? Either 24 or 25. And so I think that there's going to be a lot of product that has to trade as a result of that. I think that, those transactions are going to be transactions where the basis is going to look pretty interesting. You're going to go back to, 2020, maybe 2019 basis. I mean, you've effectively eroded, 4 years of value on a lot of those assets, which is pretty interesting. So I think that's what you're going to see. And I think that's what's driving it.
Yeah. I mean, talking about eroding that amount of value, though, I think a lot of there was a lot of fake value, though, right? I mean, I think in a way we're kind of going back to the value that where we should be at this point.
We're going back to normalcy, right?
Yeah, but not just back to normalcy, but also back to like the trend line. If you just had continued without the free money that flooded the system during COVID, it's just basically reversion to the mean, right? I think what we're seeing more than anything else. Unfortunately, some people got caught. It's great. It's great when you get in, when the reversion is working in your favor, but when it's working against you, it's not so much fun.
Right.
What are you seeing in terms of So when I mean investors, I mean limited partner sentiment. One of the things that I'm seeing a lot of is LPs who have capital calls, maybe multiple capital calls, maybe their distributions frozen on numerous deals that they're in because people are trying to pay for rate caps, and there's a lot of disillusionment amongst LPs. Are you seeing the same thing, or are you seeing something different? And I'm wondering how you guys are approaching like the change in LP psychology, maybe.
Yeah, look, I think it depends on the LP, right? Like we're working at, such significant numbers that you're going to have multiple examples of people on both sides of the fence, right? There are people who certainly don't want to do another real estate deal until they see how their existing portfolio plays out, right? And they're concerned about the capital calls, and they're concerned about, suspended distributions, using that cash to pay for rate caps, et cetera. And there's other people who view that as like, this is the right time to be investing in real estate, right? This is why there's so much opportunity in today's market. And okay, maybe I made an investment in 2021 and that wasn't the right timing, and I took, floating rate debt risk, but I've now gotten to 2024 and there's distressed opportunities. And so if I want to dollar cost average my way in, this feels like a pretty good time to dollar cost average in, potentially, right? Like there's always the potential for something around the corner, and I'm not, a magician. I don't know everything, but you definitely have that sentiment as well. So I'd say it's a pretty barbell approach, right? You don't have a lot of people right in the middle. People either vehemently feel like this is a great time to invest and they're doubling down, or they vehemently feel like, real estate's not for me because of all the, problems and distress. And it's kind of just depends on the investor.
Well, when you have a big enough platform like that, then I guess, in a way you're somewhat insulated from that, right? Because there's so many people on the platform that you're going to have fairly large numbers of each. So you shouldn't have any issue with, filling out deals.
Yeah, you see both, right? And we also, different investors want different things. So there's investors, on our platform who have said, I don't want to take floating rate debt risk, and every investment that they've ever done is fixed rate. For most of those people, this doesn't feel that stressful, right? I mean, the operating metrics of real estate assets are still pretty healthy, right? It depends. Obviously, you're always going to have, those outliers, or there's going to be situational things that come up at various assets. But, for most of the people sitting with fixed rate debt, you have no reason to sell those assets today, right? And so if you have floating rate exposure, you're having a very different experience in this part of the market cycle than you would if you were in fixed rate deals.
So in terms of your own kind of career trajectory, do you see yourself like, Realty Mogul till the end, or do you have other projects you'd like to take on someday, or is it just kind of you're too much into it to really be thinking about future steps?
Yeah, I mean, this is what I eat, live, breathe, all day, every day, right? So, it's interesting being the founder of a company. Like it's an important part of my story and my career, and we're over a decade in, but like we're still just getting started. We're still very, very small when you look at the broader real estate market. We've probably been involved now in about $7 billion of real estate assets. I mean, that's a peanut when you look at the broader market. So still a lot of interesting deals we want to be involved in, still a lot of things that we want to build. The fun part of building a company is that, it's endless what you can create. And so as long as I'm creating and working on interesting things, that's still pretty exciting.
Do you see yourself ever branching? I mean, since you've created this platform and you have all these accredited investors, obviously there's other things that people could invest in aside from real estate.
Yeah.
Have you thought about extensions of the brand into other assets, or is it really just you want to stay, keep on hoeing your row, so to speak?
Yeah, we're still very, very focused on real estate. There's a lot more to do in real estate. And so never say never. I mean, who knows what, another 10 years brings, but for now, and especially given where we're at in the market cycle, we're focused on real estate.
And I guess one last question I have for you is, you guys, there's been some disruption in the industry. Some of your competitors that were around are no longer around. What do you think has made you different, that has enabled you to kind of withstand some of the ups and downs over the last 10 years, and and come out, you seem sort of stronger than ever these days. So what do you attribute that?
Yeah, look, I always tell our team, real estate is a game best played long, right? You can make a lot of money and you can get really hurt, playing a short-term game. And I think the same is true, for a company that predominantly focuses on real estate, right? And so I think that we've tried to take a measured approach, and we just continue to put one foot in front of the other. So there's pros and cons to that, but ultimately we wanted to build a business that would be around for a long time, and that's been part of our North Star.
So slow and steady and sustainable as
Yeah,
opposed to pedal to the metal growth.
right.
Any sort of final thoughts that you would like to leave the listeners with before we sign off?
I think just for the entrepreneurs out there, like, keep going. It's hard and you got to grind your way through it, but keep going. And there's a tremendous amount of reward, being an entrepreneur and being a real estate entrepreneur.
And if folks want to learn more about either you or about Realty Mogul, what's the best place for them to go?
Yeah, so Realty Mogul is just realtymogul.com. And if you want to connect with me, I'm on LinkedIn. I'm pretty active on LinkedIn. So feel free to find me on LinkedIn and connect with me there.
Awesome. Well, Jilliene, it was great reconnecting with you and myself, and
Likewise.
fun conversation. And sorry about all of the noise earlier on, but it's the hazards of working from home sometimes. So
Yeah, great to see you again, Jonathan.
thanks very much.
All right, take care.